slide around here. Um, you can't see that on your screen, right? All those people.
No,
Perfect.
mine are at the top.
Okay, yeah,
Okay, yeah,
that's how
that's how
you're
you're
seeing.
seeing it.
Okay.
Okay, so folks, we're sitting across from one another here in the office. It is April 21st. We've got Barb here. She's going to be talking about some loan programs. These are some unique programs that Epic Lending, through its parent company CMG, offers. So they're not just to Epic. That's the reason I let you know Epic's a part of CMG. And so CMG does offer these programs out there. But these are loan programs. And the reason she's bringing these up is not only are these things that you can use with your buyers, but the list and lock is specifically there to help your sellers. And oftentimes when we think about loans, we do not think about how we could help our sellers out. So in this market where there's a lot of listings out there, right? And some of them are moving very quickly. I'm hearing about multiple offers. So it just depends on the scenario, right? But you do have that opportunity to do to reach out and grab some of those and put your seller in a position that they're going to be at the focal point for buyers looking for properties, and the seller is able to take advantage of tools and resources that the lender is going to help with if the buyer chooses to work with Epic Lending. If they don't, at least they knew it was available and, will at least open their eyes to other things. I'm going to go ahead and turn my camera and my microphone off so we can listen to Barb here, and then we will go from there. So Barb, take.
All right, I just unmuted. Can you guys hear me okay?
Yeah, I have to.
Hear you just fine.
Okay, good. If you can't, just let me know.
I gotta get.
So she's going to start the presentation, but we're going to start with list and lock.
I'll turn my
I think Melissa has to turn her audio.
my speaker down.
So the list and lock program is for realtors that are listing for their sellers. And it's based on, can you hear me okay? Jan?
Yeah.
Yes, we hear you fine.
I can't hear anything.
Here, I'll turn mine up. Just hold on.
Okay. So the list and lock program is based on concessions that your seller is willing to part with. So it's a marketing tool, first and foremost, and we'll go through the whole presentation. Are you able to move that down? Let's see. So giving you a competitive advantage over every other listing in your area. So say you have a listing in an area and things are sitting, you know this even before, going to market. There's tactics that you can use to make you stand out amongst the rest with your listings. It's okay. On my screen, it's fine. So they probably are seeing, they can see it all, right? You can see the whole screen on there.
Let me just.
Yes.
So then you want to give me control? Is that how that works? So with interest rates being the number one obstacle for most home buyers, today the national average is 6.33 on conventional loans. And a lot of times, especially with the fact that they've gone back up a little bit in the last couple of months, a lot of people are sitting on the sidelines. And really, we want to get buyers off the sidelines to buy these listings, right? We also have our rate rebound program. If you're not already familiar with it, if somebody buys with our loan, they have up to 5 years to refinance more than one time once rates go down more than a half a point with no lender fees. This is huge. So that's one advantage right there. And then you have this list and lock program, which allows your, go ahead. Okay. Which allows you to advertise discounted interest rates on your listing, which is a win-win for both of you. The list and lock program will allow you to advertise a lower interest rate based on the amount of concessions your seller is willing to part with. And the concessions do not have to be used towards the rate. This is an advertising purpose. This is marketing only. They can use it to buy down the rate. And if they use me as their lender, they'll get an extra 1% towards closing costs based on the loan amount. I've had a lot of people come to me. I've had a few that have worked out. I've had a few that ended up having their lender that they were already pre-qualified with offer that 1%. I'm sure they weren't very happy, but they were able to compete. So you always have that advantage too for the buyers on the buying end. So List and Lock is by Epic Lending and by CMG, an exclusive advantage that can help you with your sellers reaching their goals faster without lowering their listing price and help buyers overcome the biggest hurdle in the current market, which is higher mortgage rates. So like discount points, your seller will pay to secure a discounted rate, but they won't necessarily pay. That's for the List and Lock. If rates were going up right now, we also had a program called List and Lock that you could lock in a rate. But right now, rates are going to be trending down. So it's called List and Lock later. So you can advertise the lower interest rate on your site. So in the description line, and it'll show you examples in this presentation, that this home comes with a discounted interest rate. So say for instance, with the national average being 6.33, maybe your client will do 2% in concessions, which by the way, the buyer can use towards closing costs, not the rate, but to advertise it, we would use the full 2% to advertise, say, a 5.875 rate, which can get a lot more buying power for the buyers versus a lower sales price.
Would that put that in the 5% range?
It would be in the fives.
Yeah.
For sure.
So
Yeah.
very cool.
So the discounted interest rate will attract more interest from buyers. Upon purchasing the home, the buyer will receive the discounted rate for their mortgage or choose where they want that money to go. Um, and then the next one, let's take a look at some of the numbers here. So basing it on a house price of 590,000, loan amount of 413. If you dropped the interest rate, I mean, if you dropped the sales price to 399, your buyer's not gaining as much as they would if they actually had a lower interest rate, as you can see with the 7% versus 5.125%. Look at the difference in monthly payment, 2655 versus 2748 versus 2248. Or if you drop to the sales price, 2655 a month versus 2248 a month, that is huge for a buyer. Huge. I mean, that puts them out of the realm at the 2655 versus someone that might be qualified up to 2300 a month. So using this tactic is a lot of sellers don't see the potential, so it's going to be up to you to explain it or get me on the phone with them and I can explain it to them. But lowering the interest rate is going to be a much more larger effect for buyers and beneficial than it would be to reducing the seller price.
And the seller. Because the seller wins in that scenario too.
Right. Mm-hmm. Not only that, the seller, if they haven't chosen a lender for their next house, if they use us, they get 5,000 towards their closing costs on their purchase. So that's also an advantage. So there's a lot of different scenarios that we can run, and it's so easy to run these scenarios. Once I show you how to do it through my website, you can go on at any time and run these scenarios. So the numbers on the right, so they're talking about a down payment of 30% on the left, down payment of 3% on the right. You can see that it goes from 3,808, and then if you reduce the sales price, it only goes down to 3,678 versus 3,385 for the same amount of money, but put into the concessions versus the reducing of the sales price. So here's some more numbers here. Loan amount of 388 versus 368. You're still saving $250 a month if you go with the list and lock and the concessions versus just dropping the price. And you'll see all the assets this comes with, but it comes with a sign writer. It comes with a flyer, an open house flyer that you can use in your MLS for your, documents that you put in there. And then it also comes with videos you can share on your social media or that you can send via text or email to, your database that you're trying to get attention from. If you go over to the right side here with 20% down, I mean, you're looking at a difference of just a little shy of $200 versus the price drop. So still big savings for buyers when they're in this tight market. Here's some more numbers.
The higher price.
So a $700,000 home, if you leave it at 700,000.
$1 million home.
Sorry, $1 million home with a loan amount of 700,000. Sorry about that.
Yeah.
So $700,000 loan, versus reducing it to 682.5. You're still in conventional range. Down payment of 30%. Bless you. And the monthly payment. I mean, look at the difference there. Almost $350 a month savings for that buyer.
Hey, Barb.
Yep.
Quick question on the
My
the
screen
numbers
changed.
here.
It didn't?
No, that's interesting.
That's weird.
I'm looking at Melissa's screen and it changed and mine didn't.
How is that possible?
Hmm.
Folks online seeing that doesn't make sense.
Jan, are you seeing the dreaded price drop or are you still seeing the orange and white screen with the grid?
Oh, my Zoom.
Not seeing the dreaded price
I see
drop.
more price drop.
Okay.
Hang on a minute. That's why. Why it logged me out?
Oh, that's interesting. I wish there was like a lesser zoom on this camera. I feel like I'm right there.
Hey, guys, sorry about that. Something happened with
Something happened with my screen. Just hang on a minute. My Zoom dropped. So let me get you back to sharing my screen.
Hi, Dave. How are you?
Do you need me to turn this sound volume down just a little?
I
You
hear
still
it,
like
yeah.
a little bit? Huh?
Echoing a little bit, yeah.
Okay, let me just, well, I have
I see an Apple's iPhone. Who's the Apple's iPhone?
Who's the Apple's iPhone? Okay. Does everybody see the dreaded price drop now?
We got it now.
Thank you. Sorry about that, folks. Okay. Go ahead.
Okay, so the dreaded price drop. No seller ever wants to drop their price, as you guys know. Dropping the listing price, especially with multiple drops, signals to buyers there's something wrong with the house or the seller is desperate.
You have an echo now, Barb.
Your sound is back on.
Am I supposed to hit my sound off?
Your sound is off.
Okay. I still hear an echo.
You're just hearing a little bit over here. Yours is on still. Your sound. Or did your mic turn back on?
Well, I have to have my mic on in order for people to hear me better.
Oh, my mic
Yeah.
isn't turned on. Hold on.
Technical difficulties here. But a lot of times buyers will perceive that the seller is desperate or there's something wrong with the house. So instead, you could be proactive and list the house at the same time you do the list and lock. So if you're listing the house, say you were going to list it for 500,000, I've been suggesting to people that you suggest it or that you can list it at 510 and offer 20,000 in concessions right off the bat and get the house sold quicker. Because a lot of times the appraiser does keep in mind the concessions that are available on the house. And that can go for any price house too. And I'm always happy to talk to you about what's been working for people as well. So trying not to wait until the home is stale is key. And I'm sure a lot of you are seeing that on the market. Houses have been sitting on average, 80 days on market. So, I mean, if you were able to do this within the first 30 days before doing a price drop or doing it prior to listing the house is key. So come onto the market with an unbeatable value with the reduced interest rate, and you would just put that right in the first line of the description. This home comes with a reduced interest rate. And you can put what it is, and you can say, there's all these terms and conditions that can be put into the notes because there's going to be a QR code that they can scan to see what today's rates are. So capitalizing on that period when your listing is still hot, when you're getting the most eyeballs on it. It's showing you another example here at a $600,000 house and the loan amount being 480, and instead of dropping it to 460, what if you listed it at 494.4 and offered the 3% in seller concessions? I mean, look at the interest rate difference, 1.25% in interest rate savings. And look at that price, $2,885 a month versus $3,193.
Hey, Barb.
Yeah.
Going back to that page, just to make sure I'm understanding that right. So
Yeah.
for about $18,500, it looked like. You're dropping it 1.25%. Is that is that how I should be reading that, or is only a portion of that used to buy down that rate?
No, in this scenario, all of that's buying down the rate.
Okay. So
But
for 18,
again, the buyer doesn't have to use the 3% towards the rate buy down. This is a marketing tool to get eyes on your listing. So say you had a buyer that's like, oh, I love this house. Like maybe they weren't going to look at it before, right? Because it's been sitting. But if you do this proactively and they like the house, they can choose what they want to use that 3% in seller concessions for, because they're also going to get 1% from me on top of that. So the 1% would go towards their closing costs no matter what. The 3%, they could split it and have some of it go towards the buy down and some goes towards closing costs. Does that make sense?
yep, yep. Okay, thank you.
Yeah, no problem. So how it works, you would create the list and lock, and we would send you your the seller the official list and lock site so that they could look at it as well. And you would go over that with your seller, determine the seller concession. Your seller can concede up to 6% on the sales price, depending on the program, right? If it's VA, it's 4%. If it's conventional with only 5% down, then you can only do 3%. But if they're doing conventional at 10% or more down, they can do the 6%. FHA is 6%. I also have a cheat sheet on this. If anybody needs it, just shoot me an email and I can send you over that cheat sheet on how many concessions you can do by loan amount or loan type. So you would choose the lock. Oh man.
Hey, guys, we'll get back to sharing our screen. I don't know what's happening with Zoom here all of a sudden.
Can you guys still hear me?
Yeah.
Okay.
Hear you,
So
Barb.
I can go through any of this with you guys. If you guys want to also open my site on a different tab on your computer, which is Barb Spitzak, my site, and it would take you to my website. And at the top, I'll show you how to go through that. So the screen's back up and running here. You would go to the top of the screen, and I'll walk you through this as well, but it would say sell as one of the tabs. Oh,
You want me to go to that or no?
not yet. Okay, so choose lock now or lock later. Obviously, we're only talking about lock later. We're not talking about the lock now. So the $49, you would be able to market the house with a discounted rate, attract more buyers, sell faster. Epic Lending provides a plethora of custom marketing collaterals, which I'll show you. So, and what, like we talked about, I'll be able to provide an extra 1% as well towards closing costs. So we're not going to look at the lock now because that's for when rates are going up. We're going to look at the lock later. The great option when the market is stable and rates are expected to drop and or stay the same. You'll be able to advertise that discounted interest rate based on today's rates with the seller concession. Discounted rate will fluctuate based on market condition. And also it'll have that QR code where you'll be able to see what today's rates actually are. So if your sign writer says, 5.875 for this house, it'll have a QR code next to it with the sign writer. Sorry. The QR code will allow you to scan it and see what today's rates are. It could go down, it could go up, but it'll give you that information. So the lock is made once qualified buyer is identified. So we already talked about Epic Lending contributing 1%, and we want you to know that we're materially invested in helping your clients sell their house. So what your sellers get, lower rate and more customers. So when you go to my space or my site for Barb Spitzak, at the top, let's see. Oh, this is the concession page. But to get to this page, you would have to click sell at the top and then choose the list and lock. And then you would choose your concession. In this particular case, this person put in the address and they put in 2% seller concession. So in this particular example, they're advertising a 5.125 interest rate. And it's showing that some of the examples of advertisements. This is not even all of them. I'll show you all of them that you get. This one's only showing like the open house flyer and something else. Go ahead. Yeah, next one. So on this one, this is where I was talking about the sell and the list and lock, the step-by-step. So when you go to my site, you'll click sell and then list and lock, and you'll be able to do these scenarios all on your own. And then you can, text me or call me if you have questions at all on this. But it's going to be able to go to a listing presentation for you to share with your sellers as well.
So just to give a little heads up, folks, because I have done this, I did this back last year on a listing. I listed with this when we first listed the property, as Barb is saying, you can do that when you're first advertising. And we did it for our opening weekend and had an open house where we had all the materials out for people. We ended up selling that weekend. We had, I think, multiple offers. The person that ended up buying it didn't care about the actual interest rate buy down. But they used that they knew the seller was willing to contribute, I think 2%. So they just they asked for a 2% concession, and they took that as a part of what they were looking for. And I don't know if they bought the rate down or not. They used their own lender, it was fine. But it definitely, that open house, I can tell you, we had a ton of interest. And we were able to put that sign out saying, look, the interest rate is whatever it was the very low sixes at that point. We weren't in the fives, but it was at a point where the interest rates were at the very high sixes, and that drew a lot of attention. So it was pretty amazing in our marketing to be able to get that out there. So
I think it's a great tactic to start with, because before it sits on the market for a period of time, if you start it that first weekend that you're going to do open houses, I mean, it's just like a double whammy, right? You're able to advertise it. It's new. You're getting so many people looking at it. And like Melissa said, like the person didn't even use it for buying down the rate. Most people don't use it to buy down the rate completely. They might use it a little bit for the rate, but a lot for the closing costs.
well, and it's something to consider, guys. If you think about it, if you are holding an open house for somebody else and this program is out there, what a great selling point for you as an agent to educate a new buyer that there's a possibility to buy that interest rate down, or use that money to get your closing costs and pay your closing costs, and know that if you're working with a lender like Epic, that they can then do a rate adjustment, because they have this, free. You can do this at almost no cost to you, every 6 to 9 months, as long as the rates have dropped. And we know right now we're in
the rate rebound.
The rate rebound program, that they could go do that as the rate rebound and not even use it towards the interest rates right now, if they can afford that higher rate. But if they're at one of those cusps where they can't afford it, this is a great way for them to understand just how much of a difference it is if you buy that interest rate down a little bit.
Absolutely. Yeah. And the biggest thing here is marketing, right? You're trying to get eyeballs on your listing because some areas are saturated. And if it's not like a turnkey house where, everyone's clamoring for it, those are the ones that you want to get people to use their imagination a little bit and get in there. This is showing you, sorry, go back. This last slide that was on there, number 2.
Sorry.
That's okay.
There we go.
So it's circling down there with we're not going to worry about the lock certificate because we're not locking, but it comes with the open house flyer and the image to share on the MLS. And it's also giving you some information on how it works. So how it works, I can't read that, it's too small. We've already talked about how it works, determining the seller's concessions that they're willing to part with. So I think having that discussion, I'm sure all of you are having that discussion with your sellers before you even list a house. So if you know that they're willing to do 2% at some point, if you list it for a little bit higher, maybe they get more for their house than they really even anticipated, right? Knowing that the appraiser might go along with the fact that there's concessions, and if you think that the comps will even out. So choosing your concession and entering the sales price. So here is where, this is the screen after you hit sell and list and lock. This is the screen where you're going to put the address in, and then you're going to put the percentage of concessions. And you can play around with this too. So if you put in 1.5%, and then you put in 2% and 2.5%, you can see what that interest rate is going to look like and what looks better to you on your sign writer and on your documents, right? And you can, kind of play around with that, because sometimes 1.5 might be the same as 2, so you don't want to give too much away. So just do the 1.5%. So here's the viewing the rates and collateral sample. So once you put in that information, you're going to scroll down and I'll walk you through this on, I'll do my own on here. I'll have one of you guys give me an address. So one of you guys have your listing ready and we'll go on there. But this is where it shows the interest rate. So once you get past the $49, you wouldn't click purchase now until you go down and look at the rates. So it's underneath the $49 once you're on that screen. But at the very top, it's showing you the examples of the advertisements. So this is not even the full list. I mean, there's 3 videos. So it comes with 2 videos you can share. It also comes with 1 video that they share on Facebook for 10 days, part of the cost, part of this $49, that they share on Facebook for 10 days to a 50-mile radius of realtors. I mean, that's pretty
So
phenomenal.
that's shared by Epic itself.
Yes, Epic and CMG. Yep. And then you can also reshare that as well. So here is where you would change the seller concession. So if you wanted to go back up to the top of the screen and mess around with the concessions, this is where you would click change seller concessions. And like I said, it's only showing 3, like the listing image and the open house flyer. I'll show you all the ones that it comes with because it comes with 2 more videos you can share, 1 that we share, plus a listing image. Yep. So you would fill out the information for your seller with the $49 once you click purchase, and I'll show you how to do that. And then you would just have to make sure they're on board with it, and you would sign the paperwork. And then at that point, you would be given a confirmation number that you'll be using to log back in. You'll also be putting all the information in there as far as the listing image that you want, like your money shot, right? It might not be the front of the house. It might be the backyard. It might be the kitchen. You would use whatever picture you think is the best selling point of the house, and that would be on all the marketing materials.
Yeah, and just as a point here, I mean, there are some agents that may want the seller to do this and let them pay the $49. If so, I would sit down with them and have that do that. But honestly, to me, I mean, $49, I mean, that's such an inexpensive investment to create all this marketing that you're getting for free. That $49 is to me just a huge investment. And so I paid for it when I did it. And obviously it was great that it sold. I did do it on another property. I was not as lucky with that one. But I do think that it has a great branding opportunity for you. So
And to preface this, it's not always going to work for everybody, and
Sure.
you have to use it. You have to use it in such a way where you're capitalizing on the materials that it provides to you so that you can, put it on your social media and share it with the right people. Even the sellers, right? The sellers can share it on their social media as well. So this is if you were locked, which we're not doing the lock,
We'll
but
go to the next one.
yeah,
Some of the other.
yeah. So this is what you would get, the congratulations with the QR code, and you would get you would also get a confirmation code that you would continue to use to log in if you have any changes. So say you use the list and lock for 30 days, say you're going to do a price drop, if that's the case, you would want to go back in with that confirmation code and put the price drop in, and then it would send you another sign writer with updated rates. So maybe the rates came down too, right? So you could always get that. You're going to get this little one that says list and lock with the QR code. It's going to show the interest rate that you're advertising. You get all kinds of good collateral to be able to use with this. Because you want to add that to the MLS listing, the open house flyer, along with the list and lock little QR code so that agents on the other side can see it. So the preview of marketing collateral available. And like I said, this is not even the full extent, but this is a picture of the sign writer that you would get. So it looks just like that with the QR code, has your picture on there. And it might be my picture. Is it my picture or your picture that's usually on there? But anyway, information on there, and then the rate. And then as people are driving by, if they want to see what that rate looks like, they can just click that QR code to see what today's rates are. So discount points or regular concessions simpler. Not only is the list and lock extremely user-friendly and simple to purchase, but it also offers other advantages that regular concessions do not. To be able to advertise the rate you're offering on your listing sites is extremely rare. I mean, some of you are dealing with new builds, right? New builds that have a lot lower rates. So this is giving you somewhat of a competitive edge and also an edge over other listings in that area. So no one else is doing it like this. You know, regular concessions might be able to entice individual buyers, but list and lock can attract more interest right off the bat based on the interest rate and the market that we're in with it, the environment, with them going up and down and fluctuating. So can a realtor pay the upfront fee? The agent and seller split the fee? Yes, you can do it however you want. The fee can be paid by the seller or the agent. However, only one credit card can be used to pay the fee online. So can a builder with inventory use the list and lock program? Yes, as long as the builder is the seller and the list and lock policy is followed. What if rates drop during the 60? Can the seller extend the, okay, we're not worried about that. It's all about the lock, which is $999 and rates are not going up. So I just got to notice that the internet is unstable.
That is probably why I keep dropping my stuff.
Market your listing. What was that last part?
That was,
No, there was one more.
sorry, where'd it go?
Going back one.
I'm trying. There we go.
Market your listings at discounted rates. So that was just the end. But I can go online real quick if
Let me
I'm.
stop sharing and let you share your screen. So hold on a second.
So I'll share my screen and I'll go to. Does somebody have a listing they can give me? Doesn't even have to be your listing. I can just go into a listing and show you what that looks like. Anybody want to give me an address?
I've got one.
You got one?
Yep.
Okay, go ahead.
7654 North Via Camelo, that's Camello, Del Norte, Norte, Scottsdale.
Via Del.
Is it via VIE? VIA?
Yes.
Yes.
VIA.
No,
So
not via,
7654
Via.
North Via Camalo del Norte.
Yes. Yes.
Is it a home?
Yes, it is.
And what's the
Well, it's
listing
a
price?
townhome.
Say it
It's a
again.
townhome. Townhome, 825.
825.
You can share your screen.
Okay. I'm going to share my screen. Yeah.
You might make that one.
Hmm?
You did. You made it large.
So if you guys all go to this Barb Spitzak My site,
Can you make that your screen, your whole screen? Is it your whole?
it's my whole screen.
Okay.
Yes, I have it on my whole screen. So this is what you'll see when you go to Barb Spitzak My site and you go up here to sell. Can you guys all see what I'm doing?
Yes.
Okay. So I'm going to go to sell, list and lock. And I'm going to put in the street number 7654. And I'm going to go in here and put North Via Camallo del Norte. And you said Scottsdale, right?
Yeah, it's
Yes.
You know the zip code, Dave?
85258.
85258. And I'm going to show you that county. Copa started. All right, so
Can you press this little arrow there? Yep. There we go. Oh, no. Where'd we go from sharing your screen? Oh, did you actually share your go back to sharing?
can you guys still see my screen?
Yes.
Yes.
Yeah, we can still see it. So let's use 2% to start. And then the sales price, 825. And be able to see rate options. You have a question? Let me know if you have a question. Anybody can ask questions during this. It's no problem. So as you can see, there's a lot more marketing materials than what it showed in the presentation. I'm trying to minimize this little box thing. Oh, here we go. There we go. Okay. So the social ad, this is the paid social ad I was talking about all the way to the right. And then these are the two videos that you'll be able to share with your client, social media, whatever. The open house flyer in the middle, that's the one you're going to want to add to your MLS. And then you have this listing image and the sign writer. So the listing image, as you can see, there's a house there kind of at dusk. You would put whatever picture you feel is the money shot for that house. And then it would have this little sign in front with the advertised discounted rate. So you would come down here. This is where you would pay for the $49. But before you do that, I want you to scroll down and you would see the possibilities of that interest rate. So like I said, today's national average is 6.375. And if you go to here, if somebody was going to come in and they had a 720 credit score with 10% down, they're at 5.875. Can you guys see that?
Yes, we
That
do.
help everybody hold on.
Whoa.
Yes.
Sorry, but I was trying to get it larger. I don't know why my screen is the one that's controlling it.
Can you guys see the 5.875 underneath the 720 and the 10% down?
Yes, it's very clear.
Okay. Okay. So that's conventional with 3%. And then you have the 2% in concessions for the VA, which is even lower. Look at this, 5.375 or 5.5. I mean, that's phenomenal. And also the 10 arm is not bad either, as you can see. So these are the options with the 2% in concessions. And like I was saying, you could go up here and change seller concessions to kind of mess around with what that looks like. You can download a listing presentation. It takes a few, it's not quick, but it's something that you can share with your sellers for sure. And it breaks it down with how much of a benefit it is to buyers versus lowering the price. I don't think sellers realize how much of a benefit it is to the buyer to be able to have a lower interest rate versus a lower sales price. A lot of people don't understand it. So again, I'm always happy to explain it. And then this document also helps you explain it to your sellers. So I would click this to download, and then I'll show you what that looks like. So if I make my screen bigger, oh, there you go. So you can see for this house, with 3%, now we only did 2%, with 3% in concessions, you'd be able to advertise a 5.25 interest rate. Obviously, we were right in the middle because we did the 2%, but it's showing the seller cost and the monthly payment based on that. And now it's doing a comparison down here of if they lowered the price to 800 versus the 825, look how much higher the monthly payment is versus if they just did the lower interest rate. That is huge for people. I mean, that's over $400 a month. So,
This main factor.
oh, the interest rate is huge. Yes. So, do what you want with this information, but I'm always happy to answer questions regarding it. If we go back to the main tab here, as you can see, it's got all these options. And then, like I said, these are the collateral you would be able to walk away with. To advertise on social media, along with your open house information, is huge. Does anybody have questions about that? All right. Well, good. Well, I wanted to touch base as well on the all-in-one loan, which is a little bit a much different subject than than list and lock, but reach out to me with any questions about list and lock. It's a great tool for you, a marketing tool when you have a listing.
You have 20 minutes.
I know I'm going to go about
Okay.
I'm going to talk about the all-in-one.
Awesome. I just wanted to make sure.
I'm going to go into the all-in-one loan now, and I'm going to share my screen with the all-in-one loan. Let's see if this is the right one. Let me make sure.
All in one loan.
The all-in-one loan, yes. It's not the one I wanted. Let's see. I'm going to go back to here. So some of you have heard of the all-in-one loan, and I think some of you may not have heard of it. But for all of you people that have cash buyers, I want you to look at this loan as well, not just for people that need a loan, but people that don't necessarily want to tie up all their cash. The all-in-one loan works as a standalone HELOC on the purchase and then available to you, available to your sellers your buyers, when they buy, full amount of equity until 10 years. And then after the 10 years, it starts diminishing by 1/240th every month up to 30 years. But they have access to their equity. So the all-in-one loan was created back in 2005 by CMG. And it's a loan attached to a checking account. So it's for single family residents, condos, 2 to 4 multifamily, it's investments, it's primary, and also refinances. So second homes as well, 3 million max. I think that number has gone up to 3.5 to 4 million, depending on exceptions. So we can always talk about that. So reimagining the regular mortgage, right? So mortgage plays a critical role in housing. Most people need a loan to own real estate. 84% of buyers finance their purchase, and 62% of households own at least one. And the principal on homes, as you know, does not even get touched really until, I mean, you're paying more interest the first half of the loan. And with this loan, it's not compounded interest, it's simple interest. So borrowing money costs money, rates drive perceived affordability. As interest rates rise, markets slow. As interest rates fall, markets accelerate. Did you change your screen? Yeah, it's the same one.
Okay.
To offset costs, borrowers choose lengthy terms. So most people are doing 30-year fixed, right? Which are 90% of the loans. US housing debt exceeds $12 trillion. It's crazy town. So life with a mortgage. Average, so this is average age to start a family, 27 to 31, that's correct. Average first-time home buyer age, it says 33, but the new average is 40 for first-time home buyers. 40 years old is now the new average because of how things have been going. 47 is the average age of all home buyers. Average mortgage borrower age is 55, which a lot of people are saying that the big area right now is like 62. People that are 62, they're buying houses for their kids, or they're downsizing, going into multi-generational homes. So did I go the wrong way? Let's see. I should be on my slideshow, right? Shows how much I do this. So let's show from the beginning. I should have done current slide. Let's see. Okay.
Yeah.
So 42%. 42% mortgage, all of their debt combined. So most people, I mean, if you're looking at debt to income, right, they're 42% of their debt is their mortgage. The cost of financing real estate is one of the biggest obstacles Americans face. Look at all that interest. So the pros, mortgages are a one-size-fits-all solution? No. Home buyers and home owners may need more than a payment plan to get ahead. So low down payment helps first-time buyers. Familiarity developed in the 1930s. Common loans require little education. Readily available in industry commodity. Payment dependability, fixed payments benefit those with a stretch budget. The cons, it's slow. It takes decades to repay. Inefficient. Interest costs are paid primarily first within the repayment schedule. Rigid, can't take money back out unless you refinance. And expensive. Even with low interest rates, mortgage costs significant amounts of interest. So a lot of times you're going to get buyers that are so fixated on the rate, like right now. So this loan has been tremendous in the last few years because it's not so fixed, even though it's an adjustable rate, it's not based on the rate, it's based on how you live. And most people's effective rate are between 1% and 3% based on how they live and how much money they have coming in and when the money's coming in. So here's the mortgage payment structure. By year 10, for every $100 spent, only $23 is applied to the principal on a 30-year loan. So look how much money you're paying in interest. By year 21, 50% of the loan balance remains unpaid. Rate versus cost. So any home price, any amount financed, 360 monthly payments, 6% interest rate, you pay 116% interest relative to the cost of the house. So you're paying more interest than the house cost. Any home price, any home finance, 3% interest rate, 52% interest relative cost. So you're paying 52,000 in interest to 100,000 borrowed. Mortgages are a mathematical equation. So you have your rate, your time, and your principal. That's the main three components. So what clients can achieve, it pays down the balance 2 to 4 times faster without a change in budget.
The whole thing dropped.
Can you
Dang.
guys still hear me?
Wait until it pops back up.
Yes.
Okay, they can still hear me. So I'll wait till it catches up. But basically, the all-in-one loan, I just priced somebody out the other day. They want to buy $1 million house. They want to sell their house, and they're probably going to get like 300,000 in equity out of their house. They're going to get 300,000 from her dad, who wants to live with them like in a casita or another room. So they have 600,000 to put down. So they're going to do like a $500,000 loan, but they originally didn't want to do that. They wanted to do like a $200,000 loan. But I talked to them about this product because if they do a $500,000 loan and they put more money on the back end, so once they close, you can put a chunk of money from like your savings. So a lot of people know, right, your savings isn't making any money, right? You're only making less than like 2% on your money in a savings account. So this would be working for you, going towards your principal while you're not using it. So they're going to probably put another 100,000 towards the principal right after they close, but they'll have access to that $100,000. Are we back on?
Mhm.
Okay. All right. So pays down the balance 2 to 4 times faster, reduces monthly and lifetime payments by tens of thousands of dollars without depending on lower rates. Provides access to home equity dollars without refinancing once in place. So you guys would never need to use me for a refi again with this loan. Unfortunately for me. But it's a great loan. I wouldn't be talking about it if it wasn't a fantastic loan. All of our management is on this loan. So open your mind to more than just interest rate. This product is so much more.
We had an agent here that came to me, and I don't remember the exact numbers. You can probably help me finish this, but they basically were selling a property and buying another one. And I think it was a $500,000 purchase price, and they were gonna put, I think $250,000 down. So have a $250,000 loan.
Right.
Which would have taken 30 years to pay off. And instead they did this and they only put $200,000 down
And did a $300,000 loan.
and did a $300,000 loan, and it was set to be paid off in, I think, 8 years. And they were able to do that. The husband, it was a female realtor. The husband had a regular job. All of his checks went into that account for his paychecks. And then they calculated, the real estate income, and they did it very modestly, like $10,000 a quarter or something. It was a very modest amount. But the calculation would have been if they had maintained that and paid all their bills. Don't get me wrong, money comes out of that, right? But they paid their bills and it would be paid off in 8 years. Remember when she said in 15 years, you would still have half your principal remaining. The amount of interest saved on this program was massive.
Because it works on a nightly interest versus a compounded interest. So say you got paid on the 1st, but you don't pay bills till the 10th. Now you have 10 days of it working towards your principal, and then the money comes back into your checking account to pay bills. So it's a constant stepping program. So as you can see, you can use it just like a bank account. It has the ATM access, personal checks, online banking, mobile banking, client services. So the birthplace of net worth, because they help store income dollars once it's received, checking accounts. More money will pass through in 5 years than the amount typically owed on a home. So what happens is anything that goes in that checking account, whatever's not used that day, it sweeps over towards the principal that night. And it works to help you pay less interest while you're not using it. So
let me put that in layman's terms. So the amount of money that's sitting there, you're only paying interest on what isn't there. So if you have $400,000 sitting there, then you're paying interest on $100,000. That's all. Even though the next day you may spend $100,000 of it, doesn't matter for that day. That's all you're paying. So
And that's why I highly recommend it for cash buyers, because if they don't want to tie, unless they're like really rich, filthy rich, right? But if they don't want to tie up all of their money, they can do this and still have access to it, but it's still working for them to pay less interest. And again, like I said, my clients that I have right now are like all over this loan. They're like, this is awesome. Because we did the calculation, and I'll bring up their simulator. They're gonna have the house paid off, I think, in 3 years versus 30, something like that. I'll have to pull it up. I'll go through this pretty quickly since we're running out of time here in 6 minutes. So this is talking about the sweeping, how it sweeps over towards the principal while you're not using it. So you have your equity, and then you can pull it back to buy a car or remodel a room or whatever you want to do, pay bills. So the interest recomputes daily and totals at the month end. So it works on the nightly interest, and then on the 21st of the following month is when the money would come out just to pay your interest. So the use of this loan is not for it to be an interest only, even though it could be. The use of it is to have all of your income going into this checking account so that you can pay a lot less interest. Wait till you see the numbers on this. And stop me at any time if you guys have questions. So the money that stays in towards the mortgage is what's not needed for regular expenses, and not get a payment per se. It's all your deposits that are going in. So this is what I was talking about, how after 10 years, it starts decreasing as far as what's available. Because if you did keep this loan for 30 years, you would still have your equity available to you in full the first 10 years. And then it would start going down 240th every month after that, so that at the end you would owe zero. And you can close this loan at any time as well. But if you want access to that equity, you would just leave it open. So it's just showing you how much is available after year 15, 20, and 25. So now it's showing you the step down principles, right? So you have college tuition, so now your principal goes back up, and then you buy a rental property. I had a client that told me I changed his life with this loan because he had a couple rental properties, but he was a pilot. So he wanted this loan. We put him in it, and now he just bought his first rental property in cash because of how much he saved in interest on his primary.
what?
Oh yeah, he was screaming it from across the park. It was great. So he tells all of his pilot friends. So I've had one of his pilot friends do a refi with me. I had another one that was going to do a refi. He has like a 3.5% interest rate. So they were kind of on the fence on whether or not they wanted to do it. The reason they didn't do it, even though it would still save them money, because they were afraid they wouldn't be. So you do have to be diligent with your money for sure. So this is the consolidated banking platform. No. So credit and rate terms. So this is not for everybody, right? This is for people that have 43% or lower debt to income. I think they have to have 3 lines of credit. Their FICO score has to be above 700 or 720, depending on if it's an investment or primary. You have to have reserves. So there's quite a bit of, requirements that the buyer has to have. So they're not just anyone in this loan. And by the way, no one has ever defaulted on this loan ever.
That's pretty good.
And I've known people that have been out of their jobs unexpectedly, and this loan has saved them because all they had to come up with was the interest while they weren't having any income come in. So it's a big deal. Yeah. So here's the loan limits. It says 3 million, but I know we can go to 3.5 or 4 depending on the exception. So we can always talk about that if you have a client in that range.
Well, and just a point, if you've got investors doing rental properties, this also does work for them. And is so anytime, obviously the rent is coming in, the rent goes into this account. You can pull it out of the account, but it goes into the account, and that's where it gets set up initially.
Yeah.
So
yeah, and they're allowed 1 investment property and 1 primary with this loan. So there's the investment property, the all-in-one loan. So the website you want to make a note of is allinOneLoan.com. And where you would go is this calculate savings up at the top. And I can always walk you through this. I've done it several times on Zoom with clients or in person. I've done it with realtors. It's an amazing simulator. So this is what it looks like. So when you do the simulator, when you get started, you're going to put all in the parameters. You're going to compare it to a conventional loan. And you're going to put in the net amount that's going into your checking account. So not your gross, but your net. You're going to look at your checking. You're going to say, okay, I have X going into my checking. I'm going to put that in there. And say you get it twice a month. It's key that you put in there bi-monthly or how you get paid. And then at the spending, you'll put in how much you typically have left over after going out to eat, having fun, paying your bills. Maybe you have 10% left over or 15% left over of your pay every month. It just all depends on the person. But once you put all of that in and then you calculate, like in this interest right here, 468,000 in interest versus 741,000. And this is just based on how this person lives. And we always put in conservative numbers, by the way, because we don't ever want anyone to be in this loan that shouldn't be. But this simulator is awesome. So there's customer testimonials available on that allinOneLoan.com website as well. And this is a great conversation to have with some of your buyers out there. And you can always pull me in and I can get on a call with them and explain it, in further detail. So let me know your questions. Look at that, 11 o'clock. I flew through that, sorry. But I'm happy to answer any questions on this. It's a fantastic loan program for the right person.
All in one, huh?
All in one.
Until you stop sharing your screen and we'll.
See if anyone needs anything. Thank you, everybody, for your time today.
Thank you, Barb. I got to run. Thanks so much.
All right, take care, Jan.
Stop sharing your screen.
Stop share. There we go.
All right. Anybody else online have any questions?
Hi, Dave.
Nope.
Looks like he's
Anybody
frozen.
here?
Dave, are you frozen?
Oh, I wonder if it dropped again.
I hear ya.
Looks like you're from, oh, yes.
Wait a minute.
And Frank, I know this is all new to you, so just let me know if you want more information on this. I can walk you through it. I know I was flying through it.
Actually, the all-in-one might be something you want to look at on yours. Anybody here have any questions? Nope.
I like that green shirt on you.
All right. All right.
My coral. Well, thank you, everybody. Enjoy
My
your
screen
rest.
was
Oh, sorry,
I
Dave.
wasn't
What'd you
able
say?
My screen was locked. I wasn't able to say anything, or your screen was locked. I wasn't able to
Oh.
press the mic. But thank
Oh,
you.
Jan, were you able to see it?
She left, I think.
Oh, she's still in there. Well, Dave, I can go through it with you whenever you want.
No, it was when I tried to respond to you, it was your screen was locked. That's why I wasn't.
Oh.
That's why you couldn't hear me. That's all.
Oh, okay.
Thanks,
Yeah, but
Frank.
thank you. Great stuff.
Thank you.
Oh.
Appreciate it.